Now, I said earlier that I'll touch base on taxes and on gifting, but this is going to be real short, okay? And here's the reason why. Taxes are a non-issue for everybody in this room right now, and let me explain why, okay? We've all heard of the death tax or the federal estate tax, whatever you want to call it, okay? The federal estate tax is what happens when you reach a certain financial threshold. And when you die, your beneficiaries, your kids, whoever that may be, inherit a certain amount of money. If it's over a certain threshold, then your beneficiaries, maybe it's your kids, could get hit with a really big tax bill, okay? So that was an issue years ago. The estate tax a decade ago was $600,000, maybe $500,000 at one point. And yeah, that's a lot of money, but when you start looking at your home, life insurance, your retirement plan, your broker, your brokerage account, and you add that all up into one big pie, you're probably worth more than $500,000 or $600,000. So we had to worry about taxation for our beneficiaries in the past. Now, the death tax or the estate tax is $11.5 million per person, meaning you have to leave more than, so say you're widowed, you need to leave more than $11.5 million to your kids before your kids would pay estate tax. If you have more than $11.5 million and that's a problem, that is a good problem to have, right? Because you got a lot of money and we got to plan for taxes. We, as estate planning attorneys, have not had to deal with tax planning in a decade because it's been so high. 99.99999% of our clients do not have $10, $20, $30 million for us to worry about this. Most of America doesn't have that kind of money, right? So we don't really worry about the federal estate tax. Now, it is a moving target. It does fluctuate, okay? And depending on the administration that's in office, things may change. But it has been going up for a long time. Now, there was a law that was passed that increased it to $11.5 million per individual. There is a provision in that law that says if the Congress does nothing between when that law was signed and through the year 2025, it's automatically going to decrease. It's going to decrease from $11.5 million to like $5 million and some change per person, okay? So it is going to decrease, but still that's a lot of money to have, okay? And what does that mean? Well, there's a thing called portability. There is the law of portability, and the law of portability says, and it's kind of out of order here, so let me move up ahead just for 2 seconds. Here we go. So, here we go. Portability. Portability is when you take your spouse's unused portion and you port it over to yourself. So for example, right now in 2022, the estate tax for an individual is $11.5 million. For a married couple, it's $11.5 for the spouse, $11.5 for the other spouse. Together, it's $23 million for a married couple. And when one individual dies, portability allows us to take that $11.5 million from our deceased spouse and port it over to us. So now I get the $23 million. So the point is, it is $23 million for a married couple because you can combine that $11.5 million together. When it decreases to $5.5 million in 2025, you still have portability. So a married couple still has $11 million to play with before their kids will get saddled with any sort of estate tax. And again, $11 million is a lot of money to have when you've passed away. Most people don't have that sort of net worth. If they do, then we do have to kind of go down the road of tax planning, okay?